Good afternoon, everyone. It's Coram and Ed Carson with a breakdown of the action for Tuesday, January 30th, where we saw a down day ahead of some pretty important tech earnings out after the close. And I know we'll get your quick take, Ed, before the show wraps.
Well, I want to take a look at three stocks that are not tech stocks today: Lululemon, Toll Brothers, and Weatherford.
Sounds like a plan. We'll get to those, but first let's take a look at the major indexes. The NASDAQ today down 0.75%. I guess I'm in backwards world here. We'll see if we'll get that figured out with my background. But we had the S&P 500 down just fractionally today. The Dow up 0.4%, and the Russell 2000 down 0.7% today. Ed, your take on the action?
I mean, there was probably some profit taking today. Apple was also, there was some bad news on Apple. It's been lagging a little bit. But ultimately, look, it was sort of an inside day for at least some of the indexes, certainly the NASDAQ. Hard to get too upset about it. I mean, it's natural. I was thinking about taking profits, like a lot of people with all these earnings and all this news. So I think this is fine. We'll see how the earnings come in, and that's going to be more important. But I don't think today was especially meaningful.
Okay. Yeah, we'll have to see as this week progresses. A lot more headlines to come, as you are well aware, Ed. Okay, well, let's take a look at the other major indexes just really quickly. Let's go through and get thoughts on levels to watch.
I think we're looking to see right now. I mean, we're at new highs for the S&P and the Dow. Are we going to get extended, from the 50-day line, from the S&P and the NASDAQ? But otherwise, there doesn't seem to be a whole lot of resistance. I mean, the NASDAQ's got to get to all-time highs, for the Russell, you need to try to get bounce back and move higher and get to its highs from late last year. But otherwise, I think we're in pretty good shape. I'd like to see more breadth, but it wouldn't be the worst thing if we took another pause, or at least maybe some wild gyrations, like a Richter scale for a while that ends up going nowhere over the next few days. It's amazing. We have a Fed meeting and a jobs report, and it's almost like that's such an afterthought. It feels like this, they may not be, but it just feels like it with all this stuff going on.
It sure does. Okay, let's take a look at the 10-year Treasury yield. What are your thoughts on what we're seeing here?
Yeah, it was interesting. The 10-year yield actually fell while the 2-year rose, and that's more closely associated with Fed policy. There was job openings and some other data that was stronger than expected, things that the Fed probably doesn't want to see. So maybe make the Fed a little less likely to cut rates in March. We'll be looking for hints tomorrow from the Fed and Fed Chief Powell. We may not get too much because he's probably going to leave the door open. He's probably not going to say, we're definitely cutting rates or we're definitely not cutting rates in March. We may not get a lot of clarity from that, but that doesn't mean the market can't rally. But yeah, we're at key levels here. We'll see how we react with the data in the next couple of weeks.
Let's also take a look at the energy sector today. Here's OIH. This is the oil services ETF, down 2.3%, but off lows on the day. Ed, also XLE reversing higher, closing the day up about 1%. So what was going on in the energy sector today?
Yeah, Saudi Arabia apparently has ordered the state-owned Aramco, which is the world's largest oil company. It rivals, Apple and Microsoft is gigantic in the world, of the biggest company. To halt production capacity projects, and so that means all those drillers, all those oil services, machinery firms. That's a hit. Even if they have nothing to do with Aramco, that means maybe their rates will fall because all those other companies are going to come off. So there's a lot of damage there. We're obviously talking about Weatherford. But on the other side, for producers, one, that means a big rival won't be producing more. And two, maybe their rates will go down for when they do their own work. So they might get higher prices, lower costs. That's a nice combination. So there was a real dichotomy today in the energy.
Yeah. So I guess this now, the question is, can this be a sustained move here, right? Because the energy sector has been underperforming quite a bit.
Yeah, and the areas that were doing better are the ones that got hit hard today. So, I mean, it's not, they're shipping companies, and that's different. But in terms of the typical oil companies, the ones that are doing bad are now coming up. I don't know. It'll take some more than this, I would think.
Yeah. Okay, something we'll keep an eye on. Also, let's take a look at today's stock of the day, Lululemon pulling back in after a nice move off of the 50-day line. So that is still in play for this stock, but not ideal to be seeing it giving back its gains. But of course, you have to put that into broader context of what we saw across the board today for a lot of different stocks.
Yeah, some stocks definitely pulled back, and I think that's noticeable. I was trying to continue this bounce off the 50-day and the 21-day line, break this trend line. But if you look on a weekly, at least earlier, today's high was exactly matching with the 10-week line. So really signals that getting above today's high would seem like it would be an early entry. After this week, it'll be a flat base. It's consolidating after a nice move up, right where you'd expect it to, right in that profit taking zone. Then finding support around the 10-week line. So a little disappointing today, but overall the action has been very bullish.
Yeah, it definitely has. Okay, next on the list, let's take a look at TOL. This is Toll Brothers squatting a little bit today, too, off of intraday highs, closing right around that century mark as it works on a base. And we also have some support here at this stock's 50-day line.
Yeah, so it's sort of been continuing that, trending that way. There's sort of a trend line there. It was sort of bouncing off the 21 and the 10-week line. So if we can get above today's high and maybe up to that trend line, so just a little bit above today's high would seem like an early entry. There's a lot of housing and building stocks that have done quite well. There was some they weathered the higher rates that came in. Then there was the weak some of the weak numbers and guidance from DR Horton last
Right.
week. So but so that's still needs time to repair. But most others so far have done well. Pulte Group, I believe, had earnings this today, and so that one had reversed a little bit, but there's still a lot of strength in this whole sector.
Yeah, trying to keep an eye on that weekly chart. I have a position in this from a couple of months ago, so we'll have to see if it can continue to hold that 10 week. That's what I'm keeping an eye on. Okay, let's take a look at WFRD. This is Weatherford. Didn't really weather the news too well today, Ed, closing down over 12%.
Yeah, and there's not much you can do about it. I mean, this was acting pretty well. This is such a huge event. It's sort of like I said, like if Microsoft said, we're not going to buy any more equipment from anyone or something, or even more. I mean, it's just such an enormous move, decision there. So that's just an enormous volume, big drop. A lot of companies are like this. And while I'd be surprised if many IBD viewers would be like fully loaded into energy right now with all the tech names, but this just shows you like why you wouldn't want to be fully loaded into AI plays or fully loaded into cloud, because if see these mega caps and the ones that are doing AI say, you know what, this really isn't working out for us. And they fell 5-6%. Well, some of those growth names could fall 15-20% easy. I mean, that would
Right.
be not surprise at all. So that's just a reminder not to be too concentrated. Maybe
Mhm.
this can bounce back if people think, no, it's not really going to happen. But that's a real marker. And if you had bought recently, probably wanted to get out of this just because that was a pretty strong sell signal today with the loss, certainly early on.
I agree. And speaking of AI stocks, let's talk about the earnings reactions that we're seeing so far for Google, Microsoft, and AMD with their results out after the close. Here's Google right now, Ed, down about 3.8%. Microsoft, it's kind of hovering around it. Earlier, it was down 0.8%. Now it's up 0.8%. And then we have AMD. Looks like it's down 0.5% or less than that. Not sure if those earnings are out just yet, but your early thoughts here on some of these big tech earnings coming out.
I mean, obviously, a lot of them have moved up a lot, so the expectations might be high. So even if they do well with their numbers, you could see them falling. Microsoft beat views that seem pretty good. Uh, there was some weakness in Google ad revenue. I saw some reference. So even though they seem to have beaten views, oh, Microsoft has turned higher. Now, keep in mind, their
Mhm.
guidance comes out in about an hour. So that one could swing everything around.
Right.
So definitely watch for that. I don't believe AMD is out yet. So all of that and how that moves Meta and Amazon and Apple and Nvidia, Arista Networks. These are all companies just off the top of that. That's right there. So right there, you could see $10 trillion worth of stuff moving around after hours, in addition to everything else. So just sort of hold on to your seats for the next few days.
Exactly. Yeah. Still developing. So we will be on top of it all. And also, like you said, we're still going to get AMD results. We're going to get guidance from Microsoft, some color from Google's executives. So what happens tonight may or may not translate to tomorrow morning's session. But we will be watching the action as it unfolds, along with expert guidance from Mark Minervini of Minervini Private Access. He's going to be joining us on IBD Live tomorrow. So definitely tune in for that. It'll be an interesting day to have him on, I think, Ed.
Yeah, absolutely. The market wizard and somebody who also it doesn't get over too excited. Like people like David Ryan. The reason why they're wizards is because they take advantage of opportunities, but don't get too emotional either. So it's really always great to be watching them.
Okay, yeah, that's coming up tomorrow morning, investors.com/IBD Live for all the details there. We will see you there, and then we'll also see you right back here tomorrow at the close.